Ladies and gentlemen, we have earnings Wednesday for Tesla. The time has come. The upside is upon us. I believe Tesla is about to explode higher this upcoming week. And I'm going to tell you why in this video. We're going to look at what Wall Street is expecting for Tesla from a numbers basis. But that's not what is going to move Tesla stock. What's going to move Tesla is autonomy, robotics, other words, robotaxi, FSD, and Optimus. And I think there are some exciting things ahead for Tesla. So, we have a lot of work to get into in today's episode. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, check out the link down below in the description of today's episode to come join the trading community. Again, what we're doing over there is going out finding under the radar opportunities. Hence why we've been bullish on Tesla for so long. It's been an under the radar opportunity. Tesla is one of those unique companies though. Normally, a $1 trillion company is well understood by the markets. Tesla is one of those unique companies that is so large that Wall Street was so wrong on for so long. Hence why the stock has done so well, okay? And will continue to do well, in my personal opinion. And that's the main reason I think we rally into this week. But we're taking it a step further than Tesla in the trading community. We go out, we're looking at biopharmas, gene editing companies. I have one gene editing company that is up almost 200% in the last 6 months. Again, we identified it at $9. It's $26 today, okay? So we're looking at healthcare, robotics, energy, AI, software, quantum. It does not matter. These main themes for the next 10 years and finding where there is value, where these companies are being underappreciated and really misunderstood, and taking decisive investments in these high quality candidates, okay, that has been able to drive the returns this year. This is the trading community portfolio. Now, returns are not guaranteed. You could lose money. You could lose a lot of money. You could make a lot of money, okay? A lot of it depends on what you decide to do, of course. I am not a financial advisor. I'm not a financial planner. You need to make the investment decisions for yourself, okay? I'm documenting that journey and potentially highlighting opportunities. Big word on potentially, okay? This portfolio is up 144.5% year to date. Impressive, but not nearly as impressive as the gain we had on October 8th before the 3% drop on markets. On October 10th, portfolio was up over 220% year to date. I believe this portfolio is going to see a massive rebound, okay? If you guys want to come join and be a part of the action, that link is down below. Now, I also have a link down below to come sign up with Public. That is the brokerage you are seeing here. I love Public, okay? It is by far the best brokerage out there due to its simplicity, but also complexity, okay? You can look at each quarter of dividends. You can look at your next 12 months worth of projected dividends. You can obviously look at allocations. You can look at what analysts are saying and latest price targets all in the app, okay? Or all in the brokerage. By far the best brokerage I've used, way better than Robinhood, by the way. And if you join right now with the link down below, you get $100 of your choice in free stock if you sign up and deposit $1,000. So if you want a new fun little play portfolio or something to take a little bit more serious, check it out, link down below. And normally I don't do sponsorships, but again, I have $124,000 invested in this portfolio with Public, and it's what a great brokerage this is. So check it out if you guys would like to, link down below. But let's get into Tesla stock and earnings this upcoming week. So as you can see on the earnings calendar for this week, there's going to be a ton of earnings, and we're not going to run through all of them because I specifically want to focus on Tesla here. Tesla reports Wednesday in after hours, and pretty typical for Tesla, okay? What really matters and what moves the stock is not necessarily the numbers themselves. And yes, we're going to run through the numbers, but it's about the forward guidance, right? It's about what we can expect in the future. Okay. Now, some things we might not get as much clarity on as we would hope. Okay. Because Elon's compensation package is up for a vote on November 6th. Now, I do think Elon and Tesla are incentivized to get Tesla stock as high as possible. To say some bullish things, this earnings, just heading into the shareholder meeting, you don't want the stock crashing. I doubt that's going to be good for the voting outcome, right? Just going to throw that out there. I don't know how much weight you're going to place on that, but I do think there is a pressure to at least get the stock to rally a little bit. Now, here are the expected earnings. We'll run through that first, okay? EPS, the consensus estimate, is 55 cents per share. The year ago actual was 72 cents. That would be a year-over-year decline of about 23.6%. Again, looks ugly, doesn't matter for the stock. Revenue at $26.58 billion. The year ago actual was $25.18 billion. That is 5.6% year-over-year change. Automotive revenue is expected around $21.5 billion, plus or minus 3% year-over-year, and services and other expected at $3.2 billion. That's the estimate, up about 16% year to date. Now, it says here there's a range of EPS estimates. On the low side of 36 cents, potential margin pressures from price cuts, and on the high side, 69 cents, driven by cost efficiencies and delivery beats. Now, there's a range of revenue estimates. On the low side, $23.86 billion, and on the high side, $28.78 billion. Okay, so estimates are kind of all over the place. And again, as you know, really, like, the numbers are not important for Tesla. Okay, what is important for Tesla is the forward guidance. It is, what's Tesla expecting for next year? And I think we're going to start to hear more of the expectations for next year. And I think they're going to sound something like robotaxi rolling out to, tens of cities, dozens of cities potentially, as many as 30 cities is what, some analysts like Dan Ives are expecting. Okay. With thousands of robotaxis doing rides, I do think Elon and Tesla are going to give us guidance for fully autonomous, no safety drivers in the vehicles next year. That's big from a, profit per vehicle perspective. It's going to be pretty hard to be profitable or to have good margins on robotaxi if safety drivers need to be in the front seat. Okay, so I think those things are going to be big, and that's really what's going to drive Tesla. But Optimus, okay, this is a big wild card. Elon and Tesla said before that they would expect some kind of commercial sales of Optimus in 2026. This could look something like 50 Optimus bots in a warehouse doing simple tasks, right? Who exactly knows? But I think Elon and Tesla are going to give a forecast for really a piloted mass production of Optimus starting at the end of next year. Those are the real catalysts that are going to move Tesla. So if you want my honest opinion, I don't see really the downside argument for this earnings. Okay, I can't really imagine a scenario where Elon and Tesla come out and say, yep, Optimus progress is going a lot slower than we expect. We're not going to have commercial sales next year, maybe 2027 or 2028. We'll update later. Like, if that were to happen, that would be really bad, right? I don't think that's what we're going to hear. I think we're going to hear a lot of what we heard before. And yeah, it's kind of been a while since we've heard about Optimus, production targets and expected sales next year. But I think an update on that is coming. And that is going to send Tesla stock skyrocketing, in my personal opinion. Again, I think Elon and Tesla are highly incentivized at this point to get Tesla stock to rally. Now, beyond just my personal thoughts on this, Tesla stock had something interesting happen. This blue line here is the 20-day moving average. Every time Tesla breaks above the 20-day moving average, the stock goes through a pretty aggressive rally, at least in recent times, right? Whether you're looking at here, October 2024, when the stock broke above the 20-day moving average, went up 22%, and then it went up 3.5%, fell for a couple days, and then really started to skyrocket. That was the rally to new all-time highs. Following that, the stock broke below the 20-day moving average. It fell quite a bit. But then, back in April of 2025, coming out of the crash, you broke above the 20-day moving average, and boom, stock went through a pretty aggressive rally. Back here, right, you broke above the 20-day moving average on September 4th, 2025. Stock consolidated for a couple of days and then rallied aggressively. Well, now what happened on Friday, you can even see one of these green circles here, a bullish indicator. The price crosses the moving average. Tesla stock closed above the 20-day moving average. You had been finding a lot of resistance here at the 20-day moving average for the prior 1, 2, 3, 4, 5 trading days. You closed above that. Heading into the week of earnings, that to me looks like a very solid indicator of upside from here. Now, obviously, depending on what Tesla and Elon have to say, if kind of they say what I'm expecting to hear, again, dozens of cities to have robotaxis next year, thousands of robotaxis out on the road, maybe hundreds of Optimus sales next year, mass production starting at the end of 2026, heading into 2027, that is going to cause Tesla to rally into the 500s. It's obvious, okay? Now, what's fascinating about Tesla right now, specifically, is for a long time, Tesla was really led by retail investors. What I mean by that is from a sentiment perspective, like, retail investors got bullish on Tesla first, and then institutions, were like, oh, wow, like, retail was right, and would pile into the stock. Ever since last earnings, it seems like institutions are the ones that are really bullish right now, and retail is kind of lagging behind. And I think retail could really start to buy Tesla again. Okay, now if we look at Friday's option activity, you had 226 different trades from hedge funds and institutions, totaling about $201 million, with a positive order value of 84%. That's very strong. On a Friday, heading into an uncertain weekend, that's a good sign. On Thursday, you had a positive order value of 78%, and over the past week, you had a positive order value of 60%. Again, heading into an uncertain weekend with earnings the following week. That's a very strong sign that, someone out there is expecting Tesla stock to do well. Now, again, if you look at stock twits, sentiment for Tesla is bearish at 35. On Thursday, it was bearish at 33. So it did get a little bit better on Friday, but still bearish. Message volume is low at 37. Participation ratio is low at 32. There is a lot of room for sentiment to improve in Tesla. Even then, there's 77.1 million shares sold short. Okay? Only 3% short interest doesn't sound like a lot, but Friday's volume was 89 million shares. What do you think happens if 20 million shares want to cover on Tesla earnings? That's going to cause a 20+% rally in the stock. That's going to lead to a breakout of new highs and a chase on Wall Street. Because I think one of the reasons Tesla has held up so well during this market kind of correction you've seen under the surface is because a lot of the high-flying AI stocks or quantum stocks or energy stocks that have sold off recently are speculative, right? There's a lot that needs to be proven for a lot of those companies. Tesla, alternatively, has very high odds of success and really hasn't priced in what being successful on a global scale in robotaxis would look like, or Optimus, or the continuation of the energy storage business that is going to continue to grow, which, by the way, holds about 30% market share globally. Like, there's a lot of things firing on all cylinders for Tesla related to AI and robotics that Wall Street has not priced in for a long time. And, I think this earnings could be a pivotal step in actually starting to price in some of the longevity of Tesla's AI projects. Especially as rates are coming down, you might start to see Wall Street investing in Tesla for what 2028 numbers are going to look like. 2030 numbers are going to look like. And people are just going to justify Tesla stock higher and higher based on more and more expected growth. The total addressable market of robotaxi, of Optimus, you're talking in the tens of trillions of dollars. There is massive runway for growth for Tesla, and it does happen to help that these AI projects like Optimus and robotaxi are going to be highly profitable. You're really leaving the low margin legacy auto business behind and stepping into a faster, higher growth market like robotaxi and Optimus with much better margins. So even like half of Tesla's revenue or a quarter of Tesla's revenue could deliver, 5 times, 10 times more profits than what Tesla is currently seeing. So a little bit really does go a long way with AI revenue and AI projections. Now, with that said, take a listen to what Tom Lee just said about this market hitting at a minimum 7,000 into year end, which could extend as high as 7,300. Take a listen.
It's good to see you joining us from the nation's capital today. So what's your take on everything that we are talking about now daily?
Well, I heard the earlier segment, Scott, and I do think I'm kind of more in the Jamie Dimon camp, that and Steve Leisman's point that there's opacity in private credit, and that's the problem that investors are going to grapple with for some time. And I think that, along with the trade tensions and, the VIX spike, is the reason investors are a little cautious. But I don't think that's going to change that markets still have a lot of tailwinds into year end. And part of it is AI is like, I think demand is accelerating there. And we know that investors are sitting on a lot of cash, and institutional investors are really having a terrible year. Only 22% are beating the benchmark. So I think there's a bit of a chase. And then sentiment has flipped negative, which is always a contrarian buy signal. So, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
It sounds, though, like this is enough on your radar that do you think it's at least changed the game in the near term for the market?
On the private credit?
Just overall. I mean, if there are continued issues in private credit and the leveraged loan market, then the stock market's not going to take that well. I mean, you wouldn't think.
Yeah, I mean, Scott, the only thing that I don't know is how many chapters it's going to take to play out, because, there's opacity, which is what is scaring people, but then there's real credit deterioration, which I don't think that's what's happening, and I think that's why Adam and all those had called it idiosyncratic. I'm kind of in that camp because high yield spreads have behaved. So I think it's more of is the flow of capital, because I think one of the biggest sort of allocations for alternatives has been private credit. It's going to make investors pause that, maybe this market it's not as easy a return as it looks.
You told me, I think, a couple of weeks ago that 7,000 on the S&P by the end of the year was realistic. Do you still think that we could get another 5%? That's what it looks like. It's 5% between now and then. Do we have that in us?
Scott, I mean, 5% is just an average fourth quarter from 1950 to 2024. But we have the Fed easing after an extended pause. So that's 1998 and 2024. So I think that 5% might be the base case. I bet you it's going to end up being more like 7 or 8% or even possibly 10%. So I think 7,000 is the low end of what we can end the year at.
Wow. And how much do earnings have to do with that?
I mean, earnings are going to matter, but, it's been a good start. I mean, we're barely into earnings season. The banks have been good. 82% of companies are beating. There's a lot more visibility of demand and then less concerns about tariffs because we're kind of working our way through it. So companies have a better sort of visibility over the next 12 months. I think the outlooks are going to be good, and I think that's going to help stocks. And, I think there's a lot of room for multiples to still expand. So I don't think this market's that demanding.
I think it's interesting that that you suggest that you'd be a buyer of regional banks and small caps. Why
Yes.
are you willing to do that? That's not putting your toe in the water. That's like putting the bathing suit on and jumping in. Why?
Well, I mean, Scott, I know there's a lot of muscle memory for people from 2023, and that was because of a big change in rates that really caught a lot of banks offside just in their business model. That doesn't mean that this crisis, which is underwriting being done properly, should have the same issue. So I think that there has been a throw the baby with the bathwater out on the regional banks and the small caps. So yes, I think despite the fact that the Russell had a rough week, I think they're really going to be one of the beneficiaries. I mean, even on earnings basis, small cap earnings are going to grow 48% in the third quarter. That's like 4 times, 5 times bigger than the S&P. So I think there's still a lot of growth left there.
What's the message in crypto right now, Tom? Bitcoin is down today. It's 107,000 right now. What's going on there?
I think there's a couple of things. One is there was a big deleveraging last week because that VIX spike and the tariff headlines triggered the biggest liquidation and deleveraging in crypto ever in history. So I think that people are still licking their wounds. And I think that there's also a bit of gold envy because, as you know, gold has been a huge performer this year. In fact, there's people waiting in line to buy gold. So I think that there is a bit of like, I'd rather own gold than crypto. So I think this is not the top of the crypto cycle, but I think levered longs in crypto are near record lows. So I think it's kind of like we're at the basement and working our way back up.
Okay. We'll see if we get there and if we're walking or taking an elevator. Tom, thanks. Enjoy the weekend, Tom Lee.
Thank you.
Ladies and gentlemen, have a great rest of your day. That is going to conclude this video. Provide your thoughts on Tesla's earnings coming next week. Where do you think the stock's going to go? What do you think Elon's going to say? What are your projections for Robotaxi and Optimus? And generally, what are your thoughts on the broader markets? Again, if you guys want to come join the trading community, link down below in the description of this video. And for public, deposit $1,000, get $100 in free stock. Right now, with a lot of stocks going on deals, $100 can go a long way, as you guys already know. Have a great weekend, and I will see you in the next one.